Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because Bitcoin just reclaimed a major inflection point here at 109,000. Over the past few months, sellers have been in control above this level and buyers have been in control below, and it has acted as both very strong resistance and very strong support historically, with a recent false breakdown below the level. So my bias has to remain that the cycle top is not yet in and that Bitcoin still has higher to go as long as our trend remains intact. And this is why I called Monday's free weekly report the full reset. I'm just using the term full reset to describe a prolonged consolidation where everybody gives up hope thinking the 4-year cycle is playing out again before the cycle extends further. Because if you take a look at market sentiment via the Fear and Greed Index, it looks like sentiment has seen a full reset back to fear and looks nothing like what we've seen at previous tops where we had extreme greed. If you look at ETF inflows, it looks like we've had a full reset because investors are very unsure of what to do. And perhaps the most obvious full reset we've seen is the huge leverage liquidation we saw 2 weeks ago that almost completely cleared out all of the leverage in the system, giving us a much healthier base to build off of from this point onward. We also see the exact same thing with price action. We've had 3 full resets back to the 50-week moving average this cycle, and we're seeing another one here once again. Maybe this time is different, but I'd rather expect the trend to continue instead of trying to predict whether or not this time is different. And each and every one of those times, there was a ton of fear, there were terrifying narratives, yet Bitcoin held support and went higher. So that has to be my default assumption until that major pivot level breaks. And this is why I'm still quite happy with my current portfolio allocations and why no changes were made to my portfolio this week. My cash position gives me a ton of peace of mind in case the 4-year cycle does play out again, so I can have some dry powder to buy back in lower. Maybe you're earlier in your journey and you only need a 5% cash position for peace of mind. Maybe you're way later into your journey and you feel like you need a much bigger cash position at this phase of the cycle, but 30% works out great for me. And I'm still quite happy leaving 70% of my portfolio in safer spot holdings because I do still believe this cycle has higher to go and that the cycle has not topped yet. And as always, if you'd like to learn more about my portfolio automation system or mental models I use to navigate this market or common mistakes I see so many investors making, you can check out the Crypto Enjoyers program and community in the video description. I finally completed the final module of the Common Mistakes course, and I am so grateful for all of the positive feedback on these course modules. I still have so many plans for future things to add, but as of right now, I'm going to stay true to my word and move it from a one-time offer over to a subscription. I'll leave it open for just 1 more week as a grace period, but we will then be moving to a subscription model for this program and community. I added the first module of the Common Mistakes course to the About page, so you can watch that for free if you're interested. It's alongside the first module of the Mental Models course and Portfolio System courses, alongside a breakdown of what's in the classroom and some reviews and feedback as well. And I know there's a ton of uncertainty and anxiety out there right now surrounding the Bitcoin 4-year cycles and how so far this bull market has been the exact same length as the previous 2. I know many traders are also concerned about the bearish divergences on the weekly time frame, with lower highs on the RSI and higher highs on price showing that we're having falling momentum. Not to mention the continued weakness we're seeing from MicroStrategy as that MNAV continues to compress. And this MNAV compression is exactly why I've avoided investing in MicroStrategy over Bitcoin since we had that peak FOMO blow off top back in November of 2024, and I first started warning about it in December of 2024. This should act as a reminder to everyone to be careful when an asset is being called an infinite money glitch by so many influencers and everybody is piling into it as if it has to outperform Bitcoin and can't underperform. We also still have a bunch of investors complaining and whining that this is the worst Uptober ever, even though we're only down 2% for the month, which is crazy given what we experienced, and it wouldn't surprise me if this month still ended up closing green. And last but certainly not least, we still have quite a bit of macro uncertainty in the short term. We still have the US government shutdown, and we still have escalating tensions between the US and China, but I believe these will get resolved over the next few months. So it's very impressive that Bitcoin is still trading above 110,000, given all of these fearful narratives and concerns. The smaller, more volatile, and less established Bitcoin from previous cycles would have been down a lot more today given all of this macro uncertainty and all of the fear that investors are experiencing right now, which really shows you how much Bitcoin has matured as an asset and how the investor base is becoming more and more long-term oriented. And we know that extended periods of price compression and consolidation eventually lead to expansion, and as of right now, the options market is betting that that expansion is going to be to the upside, with options pointing to a price of 120K to 140K by end of year. And that's because whenever you do see consolidation, you expect it to continue in the direction of the trend until the trend eventually breaks. So as long as we're consolidating above previous resistance flipped into support, the bias has to be that it's going to break to the upside. And I believe investors would be much better off putting aside their obsession with short-term price swings, narratives, and the 4-year cycle top, and instead focused on the long-term trajectory of this asset class and what we're seeing with these crypto bills getting passed through Congress. Not to mention the explosive growth we're seeing in decentralized exchanges, with DeFi perps volume exploding past $1 trillion just this month so far. And this is what that trend and trajectory currently looks like. And I know everybody is sick of me talking about it in every single video, but I still believe we're underestimating and underappreciating just how fast the adoption of stablecoins is happening, with transaction volumes over the past 12 months reaching $46 trillion and stablecoins now accounting for over 1% of all US dollars in circulation. And I think this visualization really puts these numbers into perspective. We have the $46 trillion number and then a 9 trillion adjusted number where they try to filter out bot transactions and other types of transactions that maybe shouldn't be counted in this type of measure. But even if we use the 9 trillion figure, it's crazy to think that over the past 12 months, stablecoins did more than half the transaction volume of Visa, the biggest payments platform in the world, and more than 10% of ACH transaction volume. And I believe stablecoins will continue being one of the main use cases that brings crypto users into this space and gets them to try using things like Bitcoin as a store of value or use their stablecoins in DeFi. And I believe we're still in the early innings of this trend. And Zelle, one of the biggest payment processors in the world, seems to be realizing this, so they're jumping on board as well. And can you blame them when Tether is projected to make $15 billion in profit for 2025, making them the most profitable company in the world per employee, with only 253 employees and making that 15 billion per year. We also have the biggest bank in the world, JP Morgan, now planning to let clients borrow against their Bitcoin and Ethereum after completely banning access to these assets just 8 years ago when I first joined this market. And we also have another huge legacy asset manager, T. Rowe Price, a $1.8 trillion asset manager, launching crypto products as well. So although there's a bunch of short-term uncertainty and fear, I believe the future has never looked brighter for this asset class. And speaking of the future looking bright, that brings us to macro. The GLI says Bitcoin should be rallying into the end of November, and I'm expecting this consolidation to break to the upside once the US government shutdown ends. We know the US dollar index is chopping sideways. We know the market is pricing in more rate cuts because the labor market is weakening and inflation is cooler than expected. We have an FOMC meeting and rate cut coming next week, and this is what the current market projection looks like in terms of Fed rate cuts. We also see gold consolidating a bit after having its worst dip in years, wiping $2.5 trillion in market cap, which is more than Bitcoin's entire market cap. I expect this gold consolidation to result in continuation because I believe gold's macro top is not in yet, but these consolidation periods for gold have been great for Bitcoin and have given Bitcoin a chance to run the past 2 times they've occurred. And so far, it looks like we're seeing the early signs of that happening once again. It's also great seeing a new all-time high close for the S&P 500 while everybody is debating trying to predict exactly when the AI bubble is going to pop, when really you can just follow the trend until the market tells you otherwise. And I know that a lot of Bitcoin holders are upset that Bitcoin has been underperforming the S&P 500 over the past few months, but this is very normal. We usually see the S&P 500 lead, and then once the S&P 500 rallies for a while, Bitcoin then plays catch up, and I wouldn't be surprised if the same thing was setting up to happen here. It's hard to be bearish on risk assets like the S&P 500 and Bitcoin here when we know the Fed is going to stop quantitative tightening soon and is going to start quantitative easing at some point in 2026 and continue this global liquidity index macro breakout, especially with the cool CPI print we saw on Friday. The market expected it to come in at 3.1% year over year for CPI, and it came in at 3. And same thing with core CPI. It was expected to come in at 3.1 and came in at 3, and has even gone down on the year over year number, even though so many investors were worried that tariffs were going to make it spike upwards. And this is going to make it even easier for the Fed to continue cutting rates, because we know the labor market is still weakening, even though we haven't been receiving updates to the data. And the Fed is going to be cutting rates with an economy that is still growing, especially because of all of the continued investments in AI data centers. And I don't see this trend slowing down quite yet. As for Ethereum, it's still fighting to hold above 4,000. I still do expect it to re-enter price discovery, and these wicks are a great sign that buyers are stepping in here, even though ETFs have gone quiet because those investors are a bit uncertain and we're not seeing a ton of treasury buying right now. This does still look like consolidation on the Ethereum Bitcoin pair. And it's quite easy for me to remain long-term bullish on Ethereum here because it is the dominant chain for stablecoins, as you can see here with the dark blue region. And it also is doing about $2 trillion in stablecoin on-chain volume per month. And that is very quickly rising. So it's very hard for me to bet against this trend. And I'm sure Wall Street and larger investors will catch on. As for alt season, still no major signs yet. The altcoin season index is still sitting at a 39. And although we're seeing some strength from the Russell 2000, it has been very choppy around this previous all-time high. And we really want to see this clear continuation before we start to assume that it is a breakout. And once the Russell 2000 breaks out, we need to see Ethereum enter price discovery as well. And those have been the two requirements for the past two alt seasons in 2021 and in 2017. And my preferred way to position for that right now is by holding what I believe to be the strongest altcoin, Solana, with higher highs and higher lows going all the way back to April of 2025. We just found out this week that Citadel, one of the largest hedge funds in the world, is holding a pretty big stake in a Solana treasury company. We also have Fidelity opening up Solana to their clients, joining only Litecoin, Ethereum, and Bitcoin, which continues to show something we've been talking about for a very long time, and that's that US institutions are going to back Solana after Bitcoin and Ethereum as the big three assets of this industry. And I do believe Solana Bitcoin is putting in a higher low here and preparing to put in a higher high. And I still expect Solana and Ethereum to outperform Bitcoin on a 1-year rolling basis quite soon. But as we look forward, the federal government is still running huge deficits. That trend seems to be worsening year after year. Exponential debt growth means exponential money supply growth, as the currency has to be debased. And that is a bullish tailwind for our risk assets like the S&P 500, and especially bullish for our fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.